Good evening, everyone. This is Joe Henches with Beyond the Chart. Today is Thursday, March 27th, 2014, and this is technical analysis of the stock market today. We are going to start off here with the Dow, as we typically do, and you can see the Dow was down, 4.79 points today is what I've got. I heard something different, but that's the reading I've got tonight. We broke this trend line intraday. So that's the first time we've broken this trend line in here in the last week or so. Now, it still looks like one thing I noticed. Let me see if I can grab this here. Draw a line. Okay. One thing I noticed, it looks like when you look at just the... Oh, that's terrible. That's not very good at all. That's not what I want. All right, let's try this. Okay. When you look at the range from the opening to the close, the bodies of the day, I mean, it looks like we're in this tight range that we've been going sideways. And 1, 2, 3, 4, 5, 6, 7, 8, last 8 days. Okay. Yeah, we've had some extreme swings on these intraday up into here, but basically this is what we're doing. Now, we're starting to break the trend line in here, which could mean that we're getting ready to roll over. So that is a very real possibility. We'll have to watch and see. One thing I wanted to mention on here that I noticed, the ADX, the average directional index, which is this right here, the directional movement. The ADX is this very light green line, okay? A lot of times what we do is we use it as a indication of trending movement. When it gets above 20 and it's rising, there's a trend going on, okay? It's either a downtrend or an uptrend. When it's declining, it means the trend is not in place. It's kind of starting to move sideways. It's consolidating, etc. And when the ADX gets extremely low, okay, let me blow this up for you. When the ADX gets extremely low, like down here at 13, that means that we've got usually means we have a big move coming, okay? Now, it doesn't mean it's next week, tomorrow, next week, week after, but it's coming over the next few weeks. The last time we had a reading this low on the Dow Industrials was December of 2012, before we had this huge big move, you know, November, December, and then we kicked off all of 2013. So that's something to keep in mind. And I'm also seeing it on the S&P 500, okay? So let me blow back up here. Let's go over the SPX. The SPX has actually got an ADX of 12. Now, the interesting thing, the Nasdaq and the Russell 2000 has an ADX of 20, okay? And they've already had very extreme moves. But the S&P 500, this is rolling over, but again, a little bit of the sideways, but it may be breaking down out of this sideways move as you compare it to the Dow Industrials. Now, you can see this ADX, this green line in here. If I were to draw a horizontal line where that green line is at 12, and you roll back and say, okay, when is the green line touch 12? Well, December 2012, okay? December 2012. And July of 2012. There's just not been very many times. We got lower December 2011. And when you start looking at December 2011, let's blow this up. December 2011, we had a nice big move happen right in here, okay? July 2012. We had another move. We were in the middle of this wave one. November, December, we were in this kicking off of this huge move, 3, 4, but this huge move in here, and that's the last time ADX. Now, what we don't know is, all we know is that there's a big move coming. We don't know whether it's up or down. Now, my suspicion is that we may be getting ready to go down, but we may have another leg to the upside. I mean, we're just going to have to let the market show us. Nasdaq, again, it's been one of the weaker ones, broken this trend line, broken this support. We talked about this. Nasdaq goes down 22 points today. Russell 2000 also weak, similar to the Nasdaq, basically duplicating the Nasdaq. The New York Composite This is more the sideways action, kind of like the S&P. I mean, if we draw the trend line or the line in here, again, it's just if we go across the top of where that sat, and you look at these bodies, I mean, this is the kind of action we're in, and we're not really going anywhere. So we need to break out to get some kind of movement in here. Okay. The next thing we want to look at, short-term trading index, not really telling us a whole lot. We're smack back in the middle here on the 10-day exponential moving average. The volatility index, same thing. It's just pulled right back down. Had this, thought we're going to have something to go off of yesterday, and it did nothing. High-low is rolling over though, and the net high-low is getting a little bit low. Okay, well, it hasn't crossed the zero line, the neutral line yet, but it does look like it's rolling over. Okay, now the three stocks I wanted to take a look at tonight are the three social media stocks that I follow. Let's going to start off with Facebook. Now, I follow some Chinese also, but we're going to focus on the U.S. stocks. We're going to look at Facebook, Twitter, and Pandora. All right, Facebook. This has been rolling over. It's down, and here's the thing to notice on this. We've got this gap in here. Okay, there's a gap that was created back on January 30th. Today we got down and filled half the gap. I got a feeling that's not going to be enough, but we don't know for sure. Now it's going to close the gap, it's going to have to come all the way down to 55. Now if we've truly had 5 waves up, these red numbers I've got in here, 5 waves up on the first major, what I call first major wave, impulse wave of Facebook, then this is probably going to correct back down into this 4th wave at a minimum. Okay, that means closing this gap at 55 and maybe even going lower, but we got to watch and see how the stock's trading. Okay, but right now it's looking pretty negative. If you're not in this, I wouldn't just jump in and buy puts right here because you've already had a heck of a little move. You might want to wait to snap back, see if it gets above the 10, and then catch a close below that. We'll watch and see if something sets up. The next one we'll take a look at is Pandora. Pandora is also doing a similar type thing, and we got this gap down in here. Okay, the low here is 29. We almost got to that today. Let's see, the low on Pandora was 29.28. Okay, and it looks like it might be stalling out, getting this doji right here on the bottom at the bottom of the Keltner channels. But my guess is it's going to try to close this gap. Okay, and it's moving the thing. Now, Pandora's moved down into the 4th wave more than Facebook has. Okay, here's the 4th wave. And so this has had 5 waves up also, I believe. And so if it's down into this 4th wave, closes this gap, it could be getting ready to reverse. So we're going to have to keep an eye on that and watch to see. We're not getting any bullish divergence on any of these. Okay. Now, the last one I want to talk about, this one is pretty interesting, Twitter. Okay, this is the entire move on Twitter since it started trading. And we think we had this first move up, okay, 5 waves up. Now we've been correcting. It got very complex. It looks like sometimes when you have this ABC and you continue to get that replicating and it doesn't form a triangle, you're getting a complex zigzag, okay? So we've got a W, an X, and then another A, B, C, Y. I think there's a very real possibility that we may have completed the entire corrective move right now. When you do a retracement of this move in here, and you can see how deep it's gone. And what I like to do is sometimes test to see where, if I punch in 84.1% and add that and apply it. This has come down in here. That's another one of the Fibonacci numbers we look for on deep retracement. 70, 70.7, 84.1. Okay, so that's down here, and we've gotten this reversal bar. So it's something to watch for. Let's see if we can continue to get. You're wrong if it goes below here. Then we're not in an up move anymore if it takes out this low point. And what's the low? The low is 38.8. So I think there's a good chance that this is getting ready to go up. Let's watch and see what happens. All right, have a great Friday, everyone. This has been Joe for Beyond the Chart. Share, tweet, and subscribe. We'll talk to you this weekend. Thanks for stopping by.